Your goal as a trader is to follow your discipline. And if there's any emotional reward for you, it's not because of how much money you're making or taking pride in how little you lose when you lose. I celebrate all that. The emotional feedback that you want to amplify is your ability to come back and to do the same thing day after day after day after day without hesitation, without interruption, and having a great attitude about it, great emotional discipline. So that's the emotional payoff. Is being able to do the same thing over and over and over again. You're powerless over the results. Most people are, they're new to the business, they're immature, they're watching their P&L. And that's absolutely the wrong thing to do. You have to trade your equity curve, and that has a function, it plays a role in your position sizing. But you can't worry about any one particular trade. If you plan on doing thousands and thousands of trades, you are going to have 5, 6, 7, 8, 9 losers in a row. It's just the way that it goes. You don't have to like it, but that's why you learn to trade small. And it doesn't say anything about you as a human being. You might be smart, you might be stupid. I don't know. I've been both in my life. Look at me. You know, but you learn. They say there's a saying in jiu-jitsu in Portuguese. The English translation is effectively, there's only winning and learning. There is no losing. Obviously, you have to keep your losses small. Anyway, I'm Michael Martin. I'm a futures, options, and equity trader based in Los Angeles. I appreciate you all being here. I talk a lot about emotional intelligence and trading psychology, and I'm giving away the audiobook version of my book, The Inner Voice Trading, where I talk about a lot of these things over the course of my career. What did I have to learn? The hazing I had to go through in that book. You can get the audiobook version for free. The link is in the description here. So today I'm going to comment on something that came in from a guy I know, Michael Wallstead, on the video I did with Sean McLaughlin, an options pro at All Star Charts, and how to optimize your options trading, learn from a pro, and how to get better results. And his question is, our goal is to have no emotional objectives in the market? No, I just answered that. Or should they be aligned with life-changing money, i.e. only emotionally rewarding to make that kind of money? And I think you need to separate, like I said at the top of the show, your emotional response to the outcome of the trade. You're powerless over the outcome of the trade. So I expect everything from losing money to making money and everything in between whenever I put risk on the portfolio. I just take it all in stride. I'm not thinking about making the money. I'm not anticipating with my leg going 14 miles an hour when I'm in the trade. I don't look at it. I put the risk on. As soon as I get filled, I put in my protective stop. Then I literally walk away. I have my day filled with stuff that is full of non-trading stuff. But my risk is being managed at the pro level because I can't do much more than just aggressively move my stops when need be. I put alerts in to say, okay, here's where I want to add risk if I can, not to take profits. I don't want to do that. I'm not looking to take small profits. I want to take larger gains. Sometimes they work against me, but I'm okay with that because it's my set of rules. They might not work for you, but I'm not doing this for peanuts. I don't care about scalping a couple $100 a couple of times a day. It doesn't move the needle for me, and it's too much work for too little money. You may feel differently. I support you in whatever you're doing. Let your feelings guide you. Learn from them, right? If you're comfortable making small bits of capital, that's great, but investigate that. Why are you okay? Why wouldn't you want to make more money for all the work that you know you're already willing to do? That's not a question I can answer. I certainly don't have any judgment. Why? Well, we're all products of our environment. The money that you're making now in the market might be big compared to what you made as a kid or in your first jobs. So more power to you, right? That's all for you to investigate. But just like I said in last Friday's episode in Trader Motivation, you have unlimited potential and unlimited upside. So why would you cap that? Right? That's a very philosophical kind of question. I think only you can make the answer for. I knew what it was for me. I didn't want to go back to blue-collar despair. I had been really good as a golf caddy at Quaker Ridge and Wingfoot. I had waited at only 5 diamond places, and I made a ton of cash. But that was as good as it was going to get. And I knew, for me, my self-worth, my self-esteem, all of that, emotionally and financially, was much higher than what I was getting paid for. So I needed to find ways to kind of break out like a stock to newer levels. So I needed to find the path. I knew how to work hard. That wasn't the problem. My sister and I have a lot of grit. But I admit at the very beginning when I started to make greater sums of cash than what I had done in the blue-collar stuff, my self-esteem went higher, my sense of self-confidence went higher because I proved to myself now that I could do it. And it was scary. Why? Well, because you don't know what steps to take. People say, well, write a business plan. Bitch, please. You don't know what business plan you have to write. When you sit and write a strategic plan when you don't know your ass from a hole in the ground, what is that going to prove? All you need to do is be willing, key word there, and have all the feelings around that willingness to take the first step into the uncertainty without joining discords and without trying to lean on somebody else or be part of a group. You need to go by yourself. Don't look back. Look forward. Take those steps. You're going to fail. But like we say in jiu-jitsu, there's winning and learning. You can't lose. You can define what your losses are. Make them $10 a trade. Who's to judge you? I'm not. I'm going to be right behind you, cheering you on, saying, go, MRFer, knock it out of the park. Because when you do that, you can't lose. You bring too, I talked with Ed Scott about this a million times in the tribe. It's like there's a big difference between being a judge and using your judgment. And I think a lot of you judge the crap out of yourself. I don't even know how you get up in the morning. You're too hard on yourself. This is a game of expected values and probabilities and uncertainty. And the more emotionally mature you are, that you can deal with your feelings around all of that uncertainty when you want certainty because it feels good, it feels safe. Again, fight or flight mechanism. The more money you're going to make, the more you're willing to feel your feelings around that stuff. The one way you can control it, the key is use your protective stops. Because that's how you can take an uncertain situation and put a little certainty. That's what you can do, is just adjust your stops. You don't know how much money you can make. It's probably more than you give yourself credit for, more than you can even think. But at the end of the day, the best you can do is control the controllables, right? I talked about a friend of mine who passed away, Ken Revisa. He was the mental coach for a lot of people, especially the Chicago Cubs baseball team. He passed away, lived in the South Bay, and I'd go down to see him. And, he was like, these guys all play at a high level. Even if you get drafted and you're in the minors, you're in rookie ball, you're still playing at a very high level. And every level you get up, the game gets twice as fast. So your instincts, you have to be able to trust your instincts and rely on your ability. The more you stop and try to think, your game slows down, and now you're sit and duck. So the best thing you can do is control the controllables. I'm powerless as to whether I'm going to make or lose money, but one thing I do know for sure is how much am I willing to lose, look at the underlying volatility of the instrument, calculate my position size, i.e. the number of shares or contracts for my R. I know my entries and my exits. After that, it's a fuck all. You don't know anything else after that. So now I can cauterize all those other feelings because it's like, well, what do I expect could happen? I'm going to put the trade on. There's three outcomes. I'm going to get knocked out quickly. It might stall, or it might break out, and momentum kicks in and I start making money. Okay, then what's step number 2? Well, once it goes up a requisite amount, you can use ATR. You could use a portion of the standard deviation. Doesn't matter to me. I wouldn't use a set dollar sign because that's small-minded again. You might think $10 is a big move. $10 is like the bid-ask spread on NVIDIA, for God's sake. So I don't know. Then adjust your protective stop higher, right? There's your first 2 steps right away. Know what your risk unit is. Know your entry. Know your protective stop. That's the best you could do. You put the trade on. It starts making you money. Adjust your protective stop to break even. Sit there. Do it with 1 share, 1 contract, 1 mini. Learn to feel those feelings. See what they're trying to tell you. Because that's in the uncertainty is where you make the money, i.e. reward goes with risk. How are you going to make money if you don't want to take on the risk? So to me, that's even better because instead of having, 60% losers, 40% winners, if the more you can adjust your trades and adjust your protective stops to break even, you might have a situation where you win 30, 40% of the time. 30% of the time you get knocked out at break even, and then the difference is the number of losers. Like that alone is going to do wonders for your P&L on a monthly basis. You see what I'm saying? So to me, all this stuff is learned behavior that you can learn, ahead of time, and that's where rock and roll happens. You stay out of your own way. But the key to me is like, can you learn to feel all the feelings that you have to feel around the uncertainty and the unpredictability of the outcome of a trade? When you have price targets, it tells me that that's the most heat you can take in the kitchen. And you're probably selling yourself short, even though you might be making money. It feels good. Yeah, I made money. Great. 3-1, no matter what happens, I'm taking it off. But if you take everything off at 3-1, show me all your 5-1 winners. Where's your 10-1 winners? You don't have them. And not all the time, but Sometimes, maybe once out of 10, 2 out of 10 trades, they can go on to 5-1. So open yourself emotionally to the possibility that happen. It might mean that your 3-1 trade gets knocked out at 2-1 once in a while. But if you take everything off at 3-1, you stunt your own growth. Anyway, if you like this video, check out this one. Have a great weekend.